So this client was a national insurance company that hired Inform to help them get a better understanding around Ben admin technology. So specifically, they wanted more exposure and understanding to how their competitors were working with Ben admin platforms and how they were assessing and validating tech credit funding as it came to acquiring new clients and then also retaining clients. The methodology that Informed used, this was a project, so it was a 12-week project. We assessed a number of national carriers and we wanted to look at, again, how they were assessing the tech funding and the employer credits. So Jeff has a vast background on the carrier side, including over a decade working with an ancillary carrier. We also have a number of years of experience selling into the carrier from a distribution and partnership perspective, which has granted us a number of contacts within those internal carrier networks. So Informed interviewed 15 carriers. All of these carriers had significant ancillary business, and they currently have some sort of technology reimbursement for employer Ben admin platforms. The goal of this project was to provide more clarity and unbiased information on how other carriers were assessing tech funding requests. The questions covered tech reimbursement methodology, lines of coverage that qualified, how premium and profit margins were affected, how system integrators and resellers factored into the funding, if implementation costs were included, and then finally, if it was a PEPM versus a percentage of premium for funding. The interview results were consolidated into an anecdotal Excel booklet, as well as a 25-page report highlighting the summary of the findings that we presented to their leadership team. And then finally, I think it's important to note that as we looked at the data as a whole, we recognized some trends. And so we further divided the carriers into 4 subcategories based on how complex their tech funding requirements were, and then the products that they were offering. So we saw the medical carriers only, the medical and dental carriers, carriers that were in the small and mid-market space, and then finally carriers that really focus on that traditional voluntary benefits. So think accident, critical illness, and hospital indemnity. We were most surprised at how varied the answers were. There was an assumption going into this that we would see some consistency amongst carriers. As we know, lots of carriers talk to each other on how they're assessing these tech credits, but we saw a very big variety on how some carriers were very regimented in their qualification for funding, and then others were very closely aligned with broker or consultant partnerships. We also saw that the data did validate for this carrier that the entire market is really struggling in this space on how to collectively not only gain new business, but also substantiate their margins long term. And we did give them some new insights on a variety of ways that other carriers were assessing retrospectively their ROI and to then look forward on how they would fund tech credits in the future. And from a roles and responsibilities, this was actually done with Jeff and then one of our other advisor consultants on the front end. And then I helped on the back end in completing it. And so we, again, did those interviews, anonymized the results, provided an Excel booklet with all of the answers, and then that PowerPoint presentation to the leadership team, which from memory, we went back and forth a few times as they had additional questions, and we wanted to make sure that all of the carrier's objectives were confirmed.